For this tutorial, we wanted to talk about the entry bot. So to find the entry bot, you can go up to your trade tab, pull down to entry bot, click that to enter. Now you can select any stock that you want. Let's just say we want to select NVDA. So we want to enter a long call. And once that populates with the chart, you can basically say greater than or less than. And I want to jump into a potential breakout above the high of the day. So let's just move it over to day. We can see the high of the day right now is, let's see, let me just cover over that. That's about 187. And we're trading a little bit below that. So 187 is a good level. So 187, we'll use that on the nose. Then we can choose to add an option. It'll say wherever the current stock price is for the at the money. So up at 187, I'm going to probably use the at the money's up there, 187.50s. Now I can add, change my quantity, change my expiration. I'm going to go out to not next Monday. Again, you got to be careful of this. I'm going to go out to next Friday, give myself a little bit more time. It will simulate what you have down in here in terms of your risk profile. In terms of your execution entry, we do have smart orders that you can do it for a midpoint. You can do it at a custom price. I want to only pay a certain amount. I can go to market. We also have a smart order down here, default, quick, and slow, which we can do through another tutorial. But for example, I want to do quick. This is going to say I want to place my order, start at the best price for us would be, again, the buying on the bid, right? That would be perfect in a perfect world. But again, we're going to work our way up towards the offer, which would be us buying at market. So we're going to work the bid-ask spread to try to get a better price. So I can do that. I can change these around for each one, or if I can just use my defaults that I have in here. So for this one, it's going to price slice the bid-ask spread by 4 times, and then it's going to update that price every 5 seconds. And I can make that modification if I want. So that would basically go in if I click create. Again, so we can apply a template. And if I simply click apply, then my template will pop up. I can preview what it looks like, and you can see that it basically gives me a trading plan based off of the plan that I selected. If I don't like this plan, I can simply go back and delete and add another one that is going to work for my time frame, my risk, everything else associated with that. So that is the basis of a naked long call. Now, if I wanted to do something a little bit more like a credit spread, I could do something like, all right, I think I want to be in a sell a put spread with the stock going up. So I would say I want the stock to go greater than, let's use that 187. And what I could do is add an option. And what I'm going to do is sell to open 1. And I'll probably do something out of the money. So I will do a 1, I'm going to be selling a put. So I got to change this up. And typically it's going to default to, if it's greater than, it's going to be a call. But if you want to do a put spread, I could go into a put. Let's say I'm going to sell 175. And then I want to add another option. So I want to buy to open, and I'm going to do a put. And I'm going to do the same expiration. And I'm going to do, let's say, a 170. So it's a $5 vertical. I could then do again, a custom price. Again, you can look at your bid-ask spread where you think this should trade. This one doesn't have a lot of premium, so it may be something I have to go out a little further on and give myself a little bit more time. So maybe the 13s. So let's go out to those. And I got a little bit more premium in here. Again, this is if I'm hitting the bid 136 and taking out the offer, it's about, again, not great premium, but it's again, only $5 vertical. So I'm looking at, again, 50 cents or so. So I could put in a price down here and say limit, I want to get at least a credit of, let's say, 60 cents. I'm just trying to work the spread there. And then all I have to do is click submit. So again, if the price were to continue to go up, I would jump into a put spread. This is going to change by a little bit because as it goes up, these prices will go down. So maybe I want to lower this down to about 50 cents. Okay, we'll say somewhere around that price. And then that would create. And then I can go back. And if I wanted to put a default right in here, quickly apply a bot to manage this for me, This is say I'm going to buy it back now. 35 cents is not a great price if I'm selling it for 50 cents. So I'm going to adjust that and say I want to do this at, let's make that adjustment. And I'm going to say make it down to, let's say 20 cents. So if I can buy that back, then I want to basically do that for 20 cents. So that is a way to do both a credit spread and a naked long call. You can imagine how you could do a long call spread if you wanted to as well. So hopefully that helps you in checking out our entry bot, and we'll see you in the next one.